Hello, I'm Howard Green. Well, it just keeps getting uglier for RIM after cutting its guidance yet again yesterday, showing a major revenue and profit drop and announcing layoffs are coming. The stock is getting pulverized. It's off more than 20% today and is now well below $30 a share. RIM's market value has been cut in half to about $14 billion this year. Analysts continue to cut their ratings on the stock, and the company's sixth major shareholder, Jarislowsky Fraser, told Bloomberg it has cut its holding at least in half. Stephen Jarislowsky said RIM is resting on its laurels and that Steve Jobs is a better marketer. And we will be talking about this with and getting market reaction and what the market expects from RIM. We'll be joined by David Garrity of GVA Research. He will be in New York in a couple of minutes. But first, in studio with me here in Toronto, Brandon Mensinga. He is Senior Mobile Analyst at IDC Canada. Good to have you with us again. Thanks for coming in.
Thank you.
So did you expect the stock to get slaughtered like it's getting slaughtered today? I mean, everybody thought it'd be down, but more than 20%?
Yeah, so I think it's a significant overreaction in my view, and I think it was surprising, I think. So I think the bottom line is that people know that RIM is in transition. The transition is not a surprise, I think. And the reality is that, you know, when iPhone came out and Android came out, there was a user experience gap that was there between those platforms and RIM and BlackBerry. And I think clearly RIM understands they have an issue. They're trying to solve that issue, and they're executing on solving that issue as well.
But what about the numbers themselves yesterday? Seeing the revenue drop essentially in the guidance, $1 billion a quarter, that's pretty significant.
Yeah, for sure. But you also have to think about that Q4 for any manufacturer is huge. So the Christmas time period, all manufacturers deliver a lot of volume. So there's always a contraction happening in Q1. So for RIM, this is not surprising. And if you actually look at the numbers, the unit volume year over year is actually up. And revenue year over year for the previous quarter is also up. So when I say that this is an overreaction, I think it's based on the fact that, you know, year over year numbers are actually still looking good. The international markets are still looking good. And when it comes down to it, we know that the U.S. base is eroding. And that's the problem, the user experience problem I was referencing earlier that RIM clearly knows they have an issue and they're trying to solve.
But clearly sentiment is against them. And is there a worry on your part that this could become self-fulfilling?
Perhaps, but I think stock prices go up and they go down. I think the core senior executives at RIM are focused on the job at hand. They know, I think they have a good crystal picture of what's happening reality-wise in terms of their market situation. So I think when I say that they understand where they're at, they know what they have to solve. And I think with some of the acquisitions over the past 12 months, I think they're basically aligning themselves with solving that problem. And part of the restructuring with the employees as well, the realignment that they talked about, part of that is also to restructure to ensure that they're focused on the right objectives, not the wrong objectives.
But when you cut people, is there a risk that then you actually cut into the soul of the organization and ultimately inhibit it from coming up with the innovative products that you ultimately need?
Yeah, so I think that's a great question. So I think at the end of the day, RIM has grown tremendously over the past 2 years. They've acquired a whole bunch of companies, and the employee base has skyrocketed as a result. And I think what's happening now is really a rationalization of their situation. So they understand, A, we're in transition, B, we have some different objectives, and C, we have to make sure that the employee base is aligned to that objective, I think. So at the end of the day, is there going to be some concern internally within RIM? Perhaps, but I think at the end of the day, they're cutting dead wood, and they're focused on the right things, and they're realigning the employee base to move in that direction.
We still don't know how many layoffs are to come, I should say, but we do now have David Garrity. He's principal with GVA Research, and he joins us from the NASDAQ market site in New York. Good to have you back with us, David.
Thank you very much. Good afternoon.
So, good afternoon. So, my guest here in studio, Brandon, was commenting on what's happened to the stock today, RIM's stock, essentially calling it an overreaction. What do you think?
Well, obviously, looking at the stock, you've had it reset to levels that we haven't seen since September of 2006. And clearly, RIM as a company has indicated clearly that they see themselves as being in a transition and that they hope to expect at least to complete this transition as we go into the second half of the calendar year. The question right now for investors is how much confidence do they have with respect to the product offering coming from RIM, and to what extent do they think the company really is properly sized relative to the opportunity in front of them?
But what about the question about whether this is an overreaction on the stock? I mean, Bloomberg, as I said in the introduction earlier, was quoting Stephen Jaroslawski, his firm here in Canada, the 6th largest shareholder, getting out of more than half of its position, making some very harsh comments, saying the company's resting on its laurels, that Steve Jobs is a better marketer. What's your sense? Is it an overreaction on a shareholder's part like that?
Well, I would argue that a shareholder of that magnitude certainly acts with a due amount of deliberation. They clearly have done their due diligence, and they certainly have their own opinion of RIM management. Compared with a Mr. Jobs, who arguably is out on medical leave and yet is still thought to be a better marketer than the two co-CEOs that we have at RIM.
What do you think about that co-CEO structure, David? Does it work? Should it be changed?
I would argue right now it's posing a greater amount of uncertainty, if you will, or risk for investors, than might have been seen as being a strength perhaps in the past, given that the company is under a significant amount of pressure currently, not just the share price, but from a competitive standpoint, and the company is looking at ways to streamline, if not restructure itself. Obviously, the role of co-CEOs should be put on the table for re-examination as well.
Let me go to you on that question, Brandon. What do you think of that structure?
It's unique in some ways, I think, but at the end of the day, those guys have been co-CEOs for a long time with RIM, and they've been successful over the years. So I think, again, just this notion of overreaction, I think it kind of plays into that too, where they've clearly led a successful company up to now, and now they're going through this transition. So I think more than ever, they need to work together to ensure they can make that transition happen and execute on the plans.
It was a little bit unusual to have both of them on the conference call. Yes, there's a quote from Jim Balsillie, one of the two, that ensuring our company's continued success is also something neither of us can do alone. Do you think that is true, David, that they can't do it? That one of them can't do it, or one other person can't do it? I mean, you have tons of other companies around the world, arguably as complex as Research in Motion, where there's one CEO.
Well, look at the fact that companies are run by management teams, and what titles there are may to some extent be irrelevant. If one, as an investor, were perhaps more comfortable with the fact that there is a particular individual who is chief executive officer and therefore takes the brunt of responsibility in terms of achieving what the company needs to do. I mean, RIM can certainly meet that need right now because the chief operating officer has gone off on medical leave, and were they to decide that the co-CEO titles were really no longer adequate, you could simply have one say, fine, you be CEO, and I'll go back and be Chief Operating Officer. We'll still have the same management team, and we can still focus on executing, and we'll remove an issue which, granted, we might say it's just a matter of cosmetics or nomenclature, but if investors are concerned about it, and obviously the company needs investor support, why not just address the issue and move on?
I want to ask you a different kind of question, David. You're in New York. There are lots of activist shareholders trolling around New York. How long do you think it will be before an activist starts knocking on the door at RIM, or do you think that might happen?
Well, I wouldn't rule out the possibility. I mean, clearly you've got shareholders who've become extremely disenchanted. If we look at where the company has been in terms of its share price over the last 5 years, going from a high of approximately $140 US down to below $30 where it is right now, is a tremendous loss in terms of value. Obviously, there are going to be people asking a lot of difficult questions with respect to not only RIM management, but also RIM's board. And from the standpoint that the company has had a franchise here, but doesn't seem to be executing very well, I wouldn't rule out the possibility that somebody does step forward and argue that this is a company that should probably be better managed than it has been to date.
Brandon, I want to turn to you on a telecom-specific question, if I may. National Bank, in its report after the earnings came out, said, paraphrasing here, too many new handset models leading to execution inefficiencies. Do you think that is fair?
In some respects. So I think the carriers overall, from a global perspective, are really starting to retrench in terms of the number of SKU models that they have. So when I say SKU models, I mean the actual number of devices within their portfolio that they're showcasing for consumers. So there's SKU consolidation happening within the carriers themselves. And likewise for the manufacturers, they're also looking at the same notion of having fewer SKUs, fewer models to fill those slots effectively.
There seem to be so many on the shelves when you go into a phone store from everybody.
For sure, yeah. And I think that's that's the reality today. But I think what's clearly happening is that Apple has been very successful with one device model, one form factor, and I think Samsung, LG, Nokia, these companies are looking at that success and saying, hey, do we need to have 50 different phones that we're selling globally, or do we need to have 20, or do we need to have a series like the Galaxy series or the Optimus One series? So I think that's kind of the focus right now.
I should mention that the publication Advertising Age, and we're trying to get independent confirmation from the company, from RIM on this, but Advertising Age is saying that RIM is losing an executive named Brian Wallace, the chief digital marketing officer. And again, we're trying to get confirmation from the company on that. David, to you in New York, what about the company saying that it might do a share buyback? It has not gone ahead with it yet, but it has approval to do a buyback. The company, the executives of that company, as long as I've known that company, have always said they don't care about the stock price. They don't talk about the stock price. Anybody who does talk about the stock price has to buy donuts for everybody. So obviously, if they said they might go ahead with a share buyback, they do care about the stock price.
Clearly, they're doing something to take into account investors' concerns and needs. Obviously, it's one thing to pay no heed to your share price as long as it's rising, but try things on the flip side. And obviously, yes, it's encouraging that the company at least indicates that they're considering a buyback. But obviously, saying that you're considering and actually offering something are two quite different things. We haven't seen them take that step as of yet.
Brandon, if they were to do that, I mean, they have about $3 billion in cash, which is a considerable amount of money. What would you like to see them do with that money? Does it make sense for them to buy back shares, or would you rather see them spend it on R&D?
Yeah, I mean, at the end of the day, I'm a product guy. I think that they need to be reinvesting in the product line. And I think what's happened is that we have a bit of a timing issue because we fully understand that over the next few quarters, RIM is going to struggle. They're having delays with current models they're trying to ship. The next version of BlackBerry 7, is an incremental step again. It's not the step that's needed to really solve the problem. So what's going to happen is in Q1 of next year, that's going to be the first version of what's called the QNX-based phone. And that model, that quarter, is going to be the real comeback trail, I think, for RIM in terms of device models and in terms of the situation that we're having right now where revenue is falling, profits are falling, that type of thing.
David, last one to you. If you're a shareholder of this, would you prefer a share buyback or all that cash put into R&D?
Fundamentally looking at R&D, the problem that RIM has right now is that, unlike Apple, they don't have price leadership in terms of the sector. And certainly Apple can expand their end market just by deciding to cut price. To the extent that you've got Android-powered models on the lower end of the market, RIM is caught in between. RIM needs to focus not only on making the transition to QNX, but getting their overall costs down so they can try to maintain whatever pricing they may have. Obviously, if they lose pricing further, the revenues that they have and the shipments that they have obviously might go the way of all things.
Yeah, and actually, this is actually a great point.
Stay with the investment. Stay with the investment.
That's a fantastic point because one thing that's clearly happening in the marketplace is that Android is driving down into the mid-tier and what will be the low tier essentially in 2 years' time. So from a price point standpoint and a margin standpoint, RIM's going to be under tremendous pressure from a margin standpoint in contrast to the Android phones that'll be going into that mid-tier and low tier.
Okay, fellas, we have to leave it there. Thanks to both of you for coming in today. We appreciate it. That's David Garrity with GVA Research in New York and Brandon Mensinga with IDC Canada here in Toronto. Coming up next, reports out today that RBC could be looking to offload its U.S. retail bank to PNC. We'll hear about that from an analyst after the break.